Hey, Rick Elmendorf here, and rates have risen a little bit recently due to well, lots of things, but mainly due to the market's concerns that there's going to be increased spending, debt, and inflation. Um, so the 10-year Treasury yield is now at its highest level in well over a year, and you're probably thinking, how can this happen when the Fed funds rate remains at zero? I mean, the Fed is saying, hey, we're going to keep rates low. Well, let's remember that the Fed funds rate and mortgage rates are completely two very different things. And even though we've seen a little move higher in mortgage rates, they're still at all-time low levels. I mean, if you'd have asked me, a year ago when this all the carnage really started around in April, is 3 and 1/8 a good interest rate? I'd say it's the lowest I've ever seen. So, and that's pretty much where they are now. But there's an interesting dynamic forming here, and that's that with all the spending and whatnot, we do expect some inflationary pressures and probably some pressures upwards um, on interest rates. Now, I think we're going to move into an artificially low interest rate environment to a potentially artificially high interest rate environment because, quite frankly, due to a lot of things, I believe I was just walking out in the kitchen yesterday. And I'm like, I really think we're going to see a recession in next year. This is 2022. Now, what's that mean? If I'm right, and if a recession does happen, we're going to see mortgage rates dip. So all this spending and everything is going to be driving interest rates higher. So maybe we could see 3.5, 3 and 3/4, where we're currently seeing around 3%. So if you're looking at refinancing, purchasing, get in now because Rick could be wrong. But if I'm right, and interest rates come back down, the last thing you want to be doing on your refinances is actually spending money on closing costs. So a good friend of mine, Barry Habib, actually said this in an interview. And I was like, man, that's exactly what I was thinking. But I'm glad he and I are definitely on the same page. Don't pay closing costs right now. We've had a shift over the last week from when rates have gone up. From it used to be a good idea to pay some closing costs, you can get your rate down. Not right now. Not right now. You want to actually take a higher interest rate. Don't pay closing costs and then watch and see if Rick's right. And if I am, then you can do maybe another no closing cost loan down the road. Now, if you've already refinanced and you're sitting in the low to mid twos, then you did the right thing. So no concern there. But anyway, if you have any questions regarding refinancing, um, purchasing a house, you know, uh, cash out refinances to consolidate debts. We're seeing a lot of that right now. Purchasing a house, having trouble with that, just give me a call and link in the description down below. Thanks and have a great day.